Dan Frio here with your closing bell for May 30th, 2025. So we had some fantastic inflation numbers come in this morning, and it really didn't move the markets like I expected. Right through here, we're looking at the stock market and the equity markets. We'll basically say they're flat across the board. The VIX is coming down nicely, showing us, the anxiety level on Wall Street's dropping a little bit. We'll see how the weekend goes. Over on the bond market, we had a nice little uptick of 13 ticks, bringing rates down just a smidgen. But the big topic we're going to talk about today is Freddie Mac. Freddie Mac is coming in telling us home prices are finally starting to roll over. And I'll call it when I call it, folks. I'm not always here to tell you guys when the glass is half full. We do have areas of the country where the glass is half empty. And we're going to go over those, and those are mostly the expected areas that we thought. So let's get to all this data so you guys can understand what's going on with this stuff as well as real estate. So my name is Dan Frio. I do this video actually 2 times a day to help you guys figure out these things over here. And if you're out there looking to buy or refinance, I hope you'd love to reach out to me to see if you can use my services, because I'm licensed in all 50 states as well as Puerto Rico. And our slogan's one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Give you that information at the end. You're here for these things. So mortgage rates, they ticked down just a hair today, not as much as I thought based on the PCE, the number one inflation figure that the Federal Reserve monitors. But let's unpack some of the markets, what happened today. So basically across the board, we'll say the indices are flat. I mean, things on the highest end was a change of 0.13. So really nothing there. In the news, not too much here. There is an article about Nippon Steel down here, and I've been telling you guys this will be coming to the market more and more and more, because it is right through here. U.S. Steel as investors, Nippon Steel, just letting you know that's the area I grew up in. But we also want to talk about the bond market right through here. What's happening with bonds? Well, they reacted pretty darn good today on the inflation numbers. I do want to show you this piece of the puzzle right through here. We do have house prices in some areas that are flipping over, and I'm going to talk about that in a second. But I want to go over to here with some information about inflation, what the Federal Reserve might do at the next meeting, because they have a meeting coming up here shortly, and it's not too far away. And here's the stuff they're going to look at. And we had most of the pieces of this puzzle come in this week. We have one last piece of the puzzle, the unemployment numbers, coming in next week. And that's going to be a huge role in what the Federal Reserve does. So let's get over to this video to see what this analyst has to say about what the Federal Reserve's moves are going to be if the inflation numbers continue to drop. And then don't go away. I'm going to show you the market areas where house prices are really going down, some double digits. So hold on and let's get to the video.
We'll read anything into the another benign inflation report today?
It should take some durable success in getting inflation closer to goal. Its longer-term plan was keep the labor market in balance so no bad thing happens in cost, and just let time elapse so that service prices can adjust with its inflation slowing. That's what's happening. Because of this slowing in inflation, the Fed probably was planning on cutting the nominal funds rate a couple of times this year so that the funds rate in real terms, inflation adjusted, doesn't go up.
I agree. But we had Alan Blinder on earlier, and a lot of folks are saying, well, they haven't really seen the inflationary impact of the tariffs yet, so they're going to be cautious and on hold. But to your point, and I mentioned this earlier, services inflation, tamest in 5 years. Oil prices have declined pretty sharply. Housing prices are finally rolling over, something we've been waiting for during this whole cycle. So even if we do see some price increases on tariffs, is it likely to be a headline mover?
So you're exactly right. Service inflation is the measure of the Fed's durable progress, because that's a really slow-moving boat. Inflation had all this inertia because of those sticky prices. On the way down, as that inflation rate goes down, it's almost bankable. Nothing's bankable about inflation, but it's as close as you get. So the Fed should be given some credit to that part. Now, the issue is the Fed has a 2-factor authentication problem. It's got to see tariffs get put in place, and it's got to see the effect of the price increases on inflation expectations. If inflation expectations are well contained, yeah, they will ease.
Although the notion of any policy being in place is kind of difficult to hold on to right now, isn't it, given some of the changes we've seen even within a couple of days of each other?
Yeah, that's the two parts to the Fed's issue. The first part I used to refer to as the trapeze artist problem. If you're a monetary policymaker, you never make policy on the promise from government officials because that legislation may not pass. You may run into trouble in implementing it. You may have problems, as we've had this week, with the courts. And a trapeze artist is very well advised, don't leave the platform until you're sure your partner has left the platform. If not, you're going to get left alone in midair. And
So
so
Logan's-
the Fed,
I was going to say, so Logan's right when she says this could be a while.
this could be a while. I believe the way Chair Powell would put it is they're in no hurry.
And I don't blame him. I've been on that side all this time. And, I don't want to get political on this, but the Fed needs to stay their position. That's what they need to do. Okay, let's get over to them. They were saying all the stuff that we talk about here on a daily basis. Wages are up. They didn't bring that in, but services are down. Oil and energy's down. Quite a bit of things are down. And it's also rolling over now to the housing market. You're going to see a lot of these things right now. The housing market's starting to decline. Well, it's not as robust as it was. We'll put it that way. So there's markets that are still up. There's markets that are down. But I want to show you, Freddie Mac came out with this list, and this is a top 30 list of the prices or home prices where they're down the most. And the areas that are down double digits are the most. Well, let's just look at them. They're in the areas that we expected them to be. Let's look at the top 10. If we go through the top 10, we'll work our way backwards. San Francisco, that's in California. So, okay, we knew that was probably going to take a hit. The California market, Vallejo, taking a hit. The Temple, Texas, that was really robust during when everybody was moving as well. Pensacola, Florida, that's on the coast where it's getting hammered. Here's the one that was kind of the head scratcher. Pueblo, California, or Colorado. I didn't see that in there, but then you have Florida, and Texas. So we got Austin, which we knew, all these Texas properties, Southern California, and you can keep going down till you get to Louisiana. And so that's when I'm sitting there. It's like, okay, then Texas. So most of these areas were well predicted. So the one area that I didn't really, 23, Morgantown, West Virginia. That's where I went to college. That was where West Virginia University is. I don't know why property values there would be going down. But I did talk to a friend of mine whose daughter lives in that area. She just became, I think, a doctor. She was looking to buy a property, and he's like, the properties are crazy expensive down here. So you even have it in West Virginia where home prices, they rocked, and now some areas are coming down as well. So I don't always say that glass is half full. When there are markets starting to turn, here's where they're turning, folks, and I have no problem bringing you these. Are they going to continue to turn down to the negatives? Well, it's going to depend on a lot of things. It's going to depend on the Fed. It's going to depend on tariffs. It's going to depend on inflation. Talking about those things, let's get over to the economic calendar that we're going to see next week. So we're going to have some parts of this puzzle that the Federal Reserve monitors, the rest of it coming in next week. So we got those so far is right here. I want to explain to you, this is the federal funds rate. This is the rate the Federal Reserve controls. That's the only thing they control in regards to interest rates. Then we got the PCE. That came in today. It actually came in lower than expected. And if you go over to here, let me see. There we go. It was back in June of 2022. It was 7.2. Now we're at 2.1. I think the Fed did a pretty darn good job getting us there. They wanted it 2. We're a smidgen away from that right now. Now, the unemployment rate, that's the piece of the puzzle that we're going to get next week. So let's fly over to the calendar for next week and see what that brings us. So next week, here's what we're getting. Really not much out on Monday. Monday's usually a flat day. Tuesday, we're going to get factory orders. That's going to help us telling, how robust are things still cooking in the manufacturing sector. And then right through here, the JOLT index, how many job openings and labor transfers there are. Where's that going to take us? Okay, that's going to be some market movers there. Then we look into Wednesday. We have ADP payroll numbers. I don't like them. So it will maybe move the markets, but they're very often not close to what the numbers are going to be when we get the government numbers. And I'll show you those what we're going to get in a second. And you're going to go down through there, really nothing the rest of that day. Then on Thursday, we're going to get continued jobless claims, initial claims, and the unit labor costs. So those are the things we want for there. And then Friday, that's when we're going to get the unemployment rate to fill in the rest of the puzzle through here. So we're going to see how this goes, and then that'll determine a lot of direction on where rates go. But also it plays a role in what these tariffs are going to do. So I need you to come back here on Monday so we can start this all over so I can explain what the heck's going on and how next week's data is going to play a role in all of this. So let's go over lastly to go our portfolio we created. So if you ever follow me, we actually have a stock talk videos that we do, and I do those live so you guys can join me in here. So we create a portfolio. This is basically to help you guys understand the equity markets. Okay, now I'm not a financial planner. I don't sell stocks. I don't do this for a living. I want you guys just to understand this. It was a pretty, I think, good week for us here. We do have a new position we posted in just the other day. OKLO, it's down 2%. It is an internet play of sorts and in an odd situation. We'll go over that next week on Stock Talk, but I just want to bring you up to date on that as well. But I have some good news. We have a new website. It has a whole new theme behind it, folks, and hopefully you can navigate it a little bit better. We're going to have tabs up there where you can request to talk to us and all kind of different things. You can actually now just click in here, put in a little bit of information, tell us a little bit about yourself, and then what I'll do is I'll call you. If you want me to call you, I'll text you. If you want me to text you, or I'll just email you if that's how you want to correspond. So a whole new set of website that we have here. It still has the same tools that we have. Here's our website or our Rate Watch tool. If you're a homeowner right now and you want to track these rates to see when does it make sense to refinance, check out this video. And we also have a form you can fill out. I'll track the rates for you. We have a podcast that we do every day that we post on here as well, and a whole bunch of videos. And then you can see all through here. We have a whole different format. So I hope you enjoy it. Give us a thumbs up if you do. But my name is Dan Frio. I told you I'd tell you a little bit about myself. I'm actually a federally licensed mortgage loan officer. I work at a federal bank. That's what I truly do. And I've been in this business for 37 years now. I'd love to be able to help you. I'm licensed in all 50 states as well as Puerto Rico. And our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, what do we do? How do we do this? Okay, by you putting in your application here, what we're going to do is we're going to check programs and rates with our bank and the 33 other lenders that we work with. We're going to do all this for you behind the scenes. So you don't have to go out there and get quote after quote and have these people pull your mortgage, pull your credit reports and upload your pay stubs and all that. That's a thing of the past, folks. Let us handle it right here, the Frio team at the Rate Update. So just check it out. There's a whole bunch of tools up here for you to navigate through. And if you'd rather just call us, give us a phone call at 844-775-5626. If you have any questions for me, you can actually ask those questions right here online now, and I'll be the one responding to you. So thanks for watching. Hope you have a fantastic weekend. See you here Monday to see how this mess starts another day. Take care, folks. Bye-bye.